Excellent. So, good morning to you all. Looking forward to the day ahead. And what we've got here is a little bit of upside on stocks this morning. If you look at the S&P, we're just edging up towards that high point we had from last week. The DAX is pushing up. We've got a resistance point on the DAX on the 11th of November high, up on the 9,400 handle. And you know, we're generally sitting, Euro stocks has pushed up through yesterday's high now in the end, so we've actually got a pretty decent start to the morning from a risk point of view. You can see the Bund here is, well actually the Bund opened a little higher as well, has given those gains back. If I just zoom in a little bit on the Bund here, so we're back to kind of drop back into kind of mid-range here. Now, yesterday's session was mostly about Draghi and his team. We had comments from Pryatt and Mersch as well, but between them, and certainly Draghi at the top of that list, helped to just marginally increase the chances of quantitative easing. Okay, in the Eurozone, this was helped by comments from Draghi that, you know, other tools may well be used, and these will include government bonds. Okay, now peripheral Europe particularly benefited from this. If you look at the DAX yesterday, we just bring this chart up and make it a little bigger, then it was really a day of two halves. The first half, the DAX opened lower, dropped down below last week's low, but ultimately stabilized. And then as the ECB comments started coming in, and certainly that, Draghi didn't start speaking until the afternoon, but we did get some prior comments before then that helped to just steady the ship. We also got some Japanese news that helped to steady the ship, despite the worse than expected GDP result from Japan, which showed they're back in recession. It's the fact that the rumour mill is running overtime in predicting that Abe is going to call off the sales tax hike, the second sales tax hike that's due in October next year. And not only that, he's also going to roll out some 2 to 3 trillion yen's worth of more fiscal stimulus. And not only that, he's also expected to call a snap general election for 4 weeks' time. And all of this, by the way, is probably going to be announced at 10 past 10 this morning. So that's about an hour and a half. We've got Abe. We've heard that he has scheduled his press conference. Okay, so expect some dramatic news out of Japan at 10 past 10. So Draghi yesterday certainly boosted stocks, and the DAX here boosting up higher, breaking up above the high point we had on Thursday. And you know, European stocks generally, or Eurozone stocks generally outperformed. We had government bond yields in peripheral Europe drop, spreads tightening with German bunds in the anticipation that or increased anticipation that the ECB will roll out full-on quantitative easing. And this is fed through into the morning as well. This morning also the Japanese rumouring is helping here. So we've got a monetary policy induced, well I guess also fiscal policy if we're talking about Japan, fiscal and monetary policy induced positive sentiment here. It's not major. It's not like we're rampaging to the upside like we were for a period there yesterday afternoon after Draghi's comments. It's a little bit more contained, but nevertheless a positive sentiment. Now, this is despite the fact the Asian session was a little weak. Well, I say that. Nikkei 225 was up 2%. Outside of that, I mean, Chinese data that we had last night on housing showed that the housing market continues to decline. We had the Hang Seng and we had the Shanghai Composite down about 1%. But actually, if you ask me, this is good news. So at the moment, as it stands, China are managing to engineer a controlled slide in their housing market, the prices that is, and this is in my opinion very good news, because if you go back 12 months everyone was worried about a housing market bubble, and here we are 12 months on and prices are now dropping. They're 2%, 2.1% lower than they were 12 months ago, that is on average. the price of a house in China is 2.1% lower than it was a year ago, and this is currently a nice, well-engineered, slow drift lower in the housing market, which was very much required. So I think this bodes well for the long term for China, but in the near term, of course, the housing market is so important, such a huge chunk of China's GDP. It's something like 16% of China's GDP is purely housing related in terms of construction, and so if of course house prices are dropping, well then, one sec. If house prices are dropping, well then this is obviously bad news for the construction industry, which, as I said, is a massive portion of GDP. This is one of the reasons why China's GDP figures, or expectations about China's GDP situation, is weak. But apart from that China news, it was Japan-related positivity through the evening, plus Draghi's dovishness thrown into the mix. Given Draghi's dovishness, we are getting a bit of gold movement on the upside. If I just show you on my daily chart for gold here, I'll just bring this gold chart in. You can see that we're getting a push higher. We've had a decent 3 days for gold, which has been helped by Draghi. It's been helped by Japan, but also it's price action into this Swiss referendum that we talked about yesterday. Prices edging higher on the anticipation that Switzerland are going to vote yes. We would like our central bank to have a 20% policy. That means holding 20% of our assets in gold. So this is helping with gold on the upside. So plenty of stuff happening today. I'm going to go through the data calendar in a minute. We're going to talk about German ZEW. We're going to talk about UK CPI and get ready for the data ahead.